Michael Korn, SoCal Coast Real Estate, and I bring to you now our Real Estate Minute. Now, over the last week or two, we've talked about the different dynamics that are leading to the aggressive seller's market that we're in. And I want to share with you that some of the critics of the current real estate market will say things to the effect of the lenders are starting to give away loans like candy. They're starting to give loans to people who can't afford them. They're starting to approve people that shouldn't be approved for loans. Now, this is what we call, the actual scientific term is the hot potato. Now, in the lending world, in the financial world, it's not a hot potato because that's all they think about are numbers and ratios. But those of us who deal with human beings, regular people, day in and day out, the concept of who are they giving loans to is a hot potato. Does it bother me that I'm holding a hot potato? Nah. Here's the deal. For those of you that remember 12 years ago, what happened is that there were lots of bad loans that were given out. And what that meant was, in the process of pre-qualifying a potential buyer of a home, lenders were discounting, dare I say, ignoring their financial situation, all under the guise of everyone should have a right or an opportunity at the American dream of home ownership. Wow, that was a mixture back then of the emotional of home ownership and buying a home and raising a family with the white picket fence, and the analytic of, is this person in a position to be able to afford the mortgage that they're going to be assuming? Well, that backfired big time. Is that happening today? Prices are going up, and there's a strong demand to buy homes. So what I'm going to do is take just a couple of minutes here as part of our real estate minutes to bring up a JPEG that I have. Where is it? How do I find my I know what I'm going to do. Okay, here we go. I'm going to bring it up right now, right? There we go. It's going to be in, okay, this should work just fine. Wow. Okay, as I learn to do this better, I will get better at this. Okay, so now we are looking at a chart brought to us by a colleague of mine who works in the analytics. And we focus over here in the year 2020 and year 2021 mortgage originations. Now, this is reflecting the numbers of buyers who got approved to buy a loan. Approved to buy a house. Okay, so, and by the way, when I put on my glasses, that's how you know I'm getting serious. All right, so we look at this chart, and I believe y'all can see my cursor, and we're going to see that there is a great upswell in 2020 and 2021. Okay, now that upswell means that there's more mortgage originations. Okay, that means they are approving more people. Is that a reflection of a great economy? Is that a reflection of a great housing market? Is that a reflection of these lenders giving out loans to people that can't really qualify? Let's look a little bit closer. The powder blue represents folks that have a 760 credit score or higher. Okay. That would tend to suggest folks that can afford, not that can afford, that qualify or are worthy of buying a home and paying their debts, because 760 indicates that they generally pay their debts. We find that folks in the dark gray are also getting more approvals. And those are folks between a 720 and a 759 credit score. Look at that. That's increasing as well. And look at the light gray. These are folks with credit scores between 660 and 719. That number is increasing as well. Scooby-Doo, that's great news. These are folks that have a strong, solid track record of managing their debt and making their payments. The number of people that are getting loans in the credit score ranges below the light gray is very, very small, and it's staying very, very small, which suggests that the lenders are tending to give loans to folks that have an increased chance, a good chance, some an excellent chance of actually paying the loan and have a very good credit worthiness and a payment history. One last thing before I let you go today is that the number of people in the lower credit score ranges that are getting loans is much, much smaller. Then watch my cursor as we go over to 2008 through 2006 through 2008, 2005 through 2008. The folks with lower credit scores, a lot higher percentage of them were getting mortgage originations or loans, loan approvals. And then, of course, as we know, this resulted in a huge, huge financial catastrophe that affected tens of thousands, hundreds of thousands, maybe millions of homeowners in the years 2010 through 2013. So I mention all this largely because I want to share with you that, yes, prices are going up. Yes, there is demand, but keep in mind, most of the people that are pursuing loans at this time are being pre-qualified and pre-approved thoroughly by the lenders to not only protect the borrowers, but also to protect the institutions and ultimately our economy. Michael Korn, SoCal Coast Real Estate, and this has been your Real Estate Minute. 760-583-7683. Take care.